The edge is just executing that sort of rule-based, and if that meant getting up at 2 a.m, that's what it meant to me. So I would do that for just a little under 2 years, and from that point I knew it just couldn't really keep going on like this with having no sleep. Between 20 and 30 different strategies, all risking these things, all ranging from day trading to sort of swing trading strategies. Even risking low like amounts, it's still about 6 or 7% up over the year with like less than like 3% drawdown. I can build a strategy in less than 5 minutes now and then test it within the hour. I can test 10 strategies a day and run about 100,000 tests. I can safely say after probably a couple of months of algo trading, I can sleep well now.
Discover how one engineer eliminated emotions, sleep deprivation, and guesswork by building a portfolio of algorithms that trade 24/7, and how you can do the same in 3 months.
Okay, welcome back to the Trading Battle. My name is Steve Ruffley. I'm your host. Today's guest is Blayn Marshall, better known online as Blayn Trades. He embodies the professional systematic approach and is algorithmic trader who has zero interest in market predictions, gut feelings, or chasing flashy returns. His focus is one thing: building a diversified, robust engine of trading systems across currencies, metals, and commodities, all designed for consistency and scalability. He's the man behind the Darwin IME, and his mission is to show the world what professional, data-driven trading looks like. No ego, no drama, just disciplined execution. Blayn, welcome to the show. How are you doing?
Thanks for having me on. Very good, thank you.
Good man, good man. I'll start with the question that I always ask everybody. How did you get involved in trading? What's your story?
So it was actually probably when I was like just turned 16. My dad gave me a little bit of money to play around with stocks and shares because we've got ISAs here in the UK. And he always told me that if you learned how to play the stock market, you could retire well. So I never actually took that on board until probably when I was 18, 19, just starting out uni, and, went down the route, had a look at, what is stocks and shares initially. Done lots of research into it, and bought a few stocks. Some were good, some were bad. But I was always not, I wasn't outperforming the market as such in terms of like S&P and things like that. And it was randomly one day when I was doing my university dissertation that I come across CFDs, because I was doing like an engineering degree. So it was wave forces on cylinder structures. And a way that you use, test that is using what's called a CFD model. And I accidentally clicked on the wrong article, which come across CFD trading and Elliott wave theory with wave forces. So pretty much from that point, I was massively distracted on my dissertation because it was fascinating to me. With having a little bit of previous knowledge with like investing, trading was a totally different ball game. And since then, it never looked back, been hooked on it, and it's just, continuously trading since that point.
Really? So it's always interesting, isn't it? That kind of weird, kind of serendipitous kind of moment where, you're interested in one thing and then, the internet or, kind of fate takes you another. And I think for the curious mind, it's very easy to get hooked on trading. That's interesting. That's a good story. I like that. So, tell us more about this, kind of transition from this gut feeling trading to being fully systematic. Now, obviously, we had a lot of traders that talk about their systems. What exactly does that mean from your experience?
Yeah, so, when I first started out, it was always just doing a little bit of research into more of a discretionary technical sort of based trading. And one thing that I did struggle with is actually just, executing. Sometimes I would cut trades short and everything like that. So I always felt like my emotions kind of got in the way of it. And the way that I seen to getting out of that discretionary or, that sort of like mindset was if I can create rule-based trading. Now, I did do that. I created like a rule-based strategy that I executed for 2 years. And it totally transformed my trading. Like it went from really trying to be disciplined, and sometimes you think that you know exactly what's going to happen just by looking at it, but if you have a rule-based sort of like approach, then you just kind of follow those rules and just let it play out. So I am transformed from that discretionary into that sort of rule-based sort of scenario. But One thing that I was struggling with is sleep. Would you believe? Because with rule-based strategies, the edge is just executing that sort of rule-based, and if that meant getting up at 2 in the morning, that's what it meant to me. So I would do that for just a little under 2 years, and from that point, I knew it just couldn't really keep going on like this with having no sleep. So from there, I thought, how can I turn these rule-based sort of strategies into potentially algorithms? And I've done a little course, and yeah, that was my transition from the gut feeling, discretionary to what it is today, which is a systematic, automated approach.
So when you say trading, was this more just kind of day trading, or was it longer term trading? What's the kind of time frames?
So originally it was obviously day trading, and then I sort of like went into more of a swing trading strategy. So I was using the daily time frame as well as the 4 hour time frame, where before I was purely using the 1 hour, only looking at 1 hour candles, and yeah, that took up a lot of time, just to keep trading that sort of thing. So that's why I moved to 4 hour and daily, and yeah, then obviously now transition to automated, which is using any time frame.
So you're talking about building a strategy around different asset classes as a portfolio. Is that what you're doing?
That's what I'm doing right now. Yeah, so I'll trade, lots of different FX pairs, commodities, and recently just started adding indices.
So how does the algorithm deal with the kind of uncertainty of the markets right now? Things like I've mentioned it quite a few times on recent interviews, the taco trade, tariffs, the list is literally endless. I mean, how do you kind of compensate for that, or don't you?
Yeah, I mean, so the way that I build my algorithms is I build it on as much historical data as possible so that it goes through multiple stages, multiple different events, similar to what we're seeing right now. Not that this time's the same as what happened last time, but going through like the 2008, 2009 crashes, seeing how the performance on these algos performed there. If they can perform in these sort of scenarios, it's possible that they could perform in the scenario that we have right now. But what I do to get around it is I don't really risk that much. Like, most people go around the 1% risk rule, or, that's what's taught in retail quite a lot of the time, where I'm trying to sort of like attack it from like a quantitative sort of approach. So I could risk anything from 0.05 to 0.1% per trade on each strategy. This allows me to stay in the game as long as possible. So even going through the turbulence right now, there was a period this year where I went into drawdown naturally because a lot of things were happening. And yeah, keeping that low risk allows me to keep that level head to go through all these like sort of like tougher times as it is for some people, and also learn from it.
So what kind of time periods are you looking to kind of, again, not hold the trades, but what's your kind of, I assume you're talking like kind of a fund scenario. How much, kind of momentum do you need to gain to get the kind of returns? Are you talking a year, 10 years? Because it's great risking small amounts of money, but I mean, with small amounts of money, you don't necessarily get, returns that everybody expects these days.
Yeah. So, I mean, because it trades like in my portfolio, I've got between 20 and 30 different strategies, all risking these things, all ranging from day trading to sort of swing trading strategies. So in like a year like this year, even risking low like amounts, it's still about 6 or 7% up over the year, with like less than like 3% drawdown, like near 2.5, I think it is this year so far. So as much as like risking low, because you've got so many different systems trading quite a lot, like it does add up in how many trades that are being taken. I could have as much as 10 trades in one day. So, if you think of it from that perspective, if you had 10 trades at 0.05, you've actually got 0.5% risk for the whole day across the whole portfolio, depending on what assets are being traded, if there's any like hedging involved or diversification across different correlated assets.
Sure. Okay. So I believe you're doing this through Darwinex.
Yeah, so my portfolio is on Darwinex, as I think that's a great platform to sort of like showcase what you can do from a retail perspective, with having that sort of credibility, because it's really good to kind of showcase what you can do on that. And from that, you can obviously get investment funding through Darwinex as well.
Yeah, no, I know the guys from old. I know Juan from when he started it. I mean, that was going back for over 10 years ago, I think now. It's amazing how it's grown in popularity, and it does look a really great platform. So, I mean, how does that kind of incentivize you? You know, it's obviously from the funding perspective, it makes sense. You know, you talk about the kind of risk and the reward, etc., and scalability. So, is it from your perspective, you're looking to get more funding? You know, like the difficult question is, if it's that good and you believe in it yourself, would you look for external funding or fund it yourself? How do these things work? I think the guys out there would be interested to see what your kind of, business plan model type thing is.
Yeah, so my initial plan was to join Darwinex first of all, which would have been just less than 2 years ago because I seen it as a great platform to kind of showcase and get funding through that. But I also seen it as like another aspect of, if you've got that track record out there and you're sharing it online and it's viewable and it's with a reputable broker, that can then lead to managing third party capital, which I actually do right now on the side as it is, just from using that platform to showcase what I can do. So even like what they're looking for is like a really good approach on like Darwinex, like against like your risk profiles and things like that, and they've got all the metrics in terms of like they can see what sort of capacity your sort of like portfolio can take. So
Yeah.
you could have someone that's on there that's capacity is like $500,000, which is not very scalable. Is where something like, for instance, I'll give an example for IME. I don't know what it is, but it's around the 100 million mark. So they, other external funds and that could have a look at those metrics and think, okay, this sort of portfolio could be added into our sort of like fund, and we can scale it up to sort of like X amount. So it's very good to sort of use these things, use the metrics as well to learn about what you're developing as well.
Yeah, that's very interesting, isn't it? Because again, we've talked to many traders, approaching trading as a business, and this is the other side, with more, capital, because there are different avenues of revenue for yourself, the trader, and the IP. So without giving any IP away, what's the strategy kind of based around? What?
Yeah, so I mean that portfolio is more based around breakouts, because most research that I've done long term, and most people will find, is all the successful traders have done like sort of a trend following basis and got really good results. So breakout trading is not too dissimilar. So I've went with that approach mostly because I do believe, like, when you get volatile times and you get heavy trends, that's where I'm going to make the brunt of my returns.
Yeah. Okay. So is there any kind of asset classes you're focusing on right now? I mean, coming towards the end of the year, oil's in a bit of a slump. All the risk assets, gold. I mean, do you dip into crypto, to Bitcoin? I mean, what kind of things are you looking at?
So this year I've been heavily trading dollar, yen, and gold mostly, because that's where the volatility has been, as well as certain periods throughout the year trading euro dollar. Within these systems, I do have like volatility metrics that will sort of cherry pick when volatility is up naturally. So you could use, for an example, use something as simple as an ATR. But I've not really dabbled too much in the crypto space as much as probably what I should be with being a breakout trader. And it's something that I do have on the horizon for next year.
Yeah, I mean, I guess the kind of crypto you almost have to keep separate. I think
Exactly. Yeah.
it pick and chooses, doesn't it? What it decides the narrative is. It's like the sum of all narratives. I think I'm describing it in a minute.
Yeah.
Yeah, it's interesting. Okay, that's interesting. So, I mean, as from kind of a scalability perspective, you said 100 million. I mean, do you think that's achievable?
I mean, that's what I'm going to try target anyway.
Mm,
So, I mean, I do think it is achievable. What you can do as well. That's based on the sort of like portfolio I have right now.
mm.
Obviously, we can actually add more systems at a lower risk, making it more scalable as well. So, there's a lot of things that you can do to make it more scalable than say what it's capped at. So, I think if the results keep doing what they're meant to be doing, then I think it is possible to scale to that sort of size, because I think there's quite a lot of money out there. I think there's a lack of good traders at times that, if you can do what you can do, you will attract it.
Absolutely, mate. Yeah, I can't argue with that statement at all. So when you say these algorithms, you did a short course. I mean, that's interesting. I mean, what was that? Because that's a whole different side of trading, isn't it? Kind of obviously having the ideas is one thing, making it into something that actually works
Mhm.
based on your ideas. I mean, that might be interesting for people to know what we know. How did you go about that?
Yeah. So, like what I done is I looked at, okay, how can I create systems fast, but also test fast. And we're in a great like era that there's a lot of like AI and like software out there that you can actually use. Like for example, some of the basic systems I could use FX Dreamer, which is a drag and drop system. So you're basically building full charts of your ideas, although it is quite hard to get some of the ideas across. To build basic ideas is very good. And then you pair that with like normal coding, like MQL5. I use MT5 since I learned MQL, and you add layers to that. So, a basic course on something like that, depending on how much time you have, like I probably pushed it put as much time as possible into it. It took me 3 months to get to the point where I could build a system and it was 3 months before I had my first live system between being, discretionary, rule-based, manual to being automated. So it all depends how much effort you're willing to put in, how much time you're willing to put in, and having the right sort of like education as well, because you could go down different routes that are not going to be the best as well.
Sure. Yeah, I mean, don't get me wrong. I've dabbled and had teams of coders trying to automate what I do, and it never ended the way I thought it was going to be. There's always something in there that the kind of you didn't expect was going to happen. So yeah, it's always interesting to see when you put it into live markets how it actually does perform. So you say it's been running for 2 years now.
So that's that on Darwinex. It's been running just less than 2 years, but I've been automated trading for about 3 years now. That first year was still really good, but it was a very good learning phase as to market conditions and really building sort of like structure and strategies. And then when I done Darwinex, that was when I was like, right, let's build a quantitative like sort of portfolio to then showcase what I can do, because I run like so many different accounts to begin with, just to test a lot of different things in live markets. So that first year was really a good testing phase, and then it is what it is today. Now building like really sophisticated sort of portfolios.
Okay. So are you going to continue on your own, or are you going to start hiring some MIT grads? How do you take it to that next level? I mean, again, it's always interesting speaking to lots of different people that I have, how they kind of progress things in the journey. Because for me personally, I never really had a trading mentor, so everything I did was me. That comes with a steep learning curve, and kind of you hit a wall sometimes that you don't know how to get around. There's, like you say, very few people you can actually listen to out there, or actually can provide the help you want. So, I mean, these models, I'm assuming, can get horrifically complex in the kind of from a technical perspective. So, I mean, what's your kind of plans around that? If you have any, you carry on as you are. I'm just interested in how the process works.
Yeah, I mean, to be honest, like it's as bad as it sounds, I don't really need to hire anyone as such, because when you've got certain softwares, it unfortunately does replace people to an extent. Most things what I'll do is I'll basically take any book from online, and sounds quite bad, but put it into say ChatGPT or one of the like AIs, and I'll say condense this down, pull me the rules. And then what I do is I create basically a massive like catalog of strategies and rules to test. What I then do is then build them on a daily basis, because I can build a strategy in less than 5 minutes now, and then test it within the hour. I can test 10 strategies a day and run about 100,000 tests. So I suppose like the only thing you could do is hire someone else, and then you're doing twice the work as fast as well. But as it stands right now, I'm quite happy just doing that. Because I'm testing so many different things. And I think the lucky thing we have is, a lot of resources on the internet that I don't feel like you'll run out of ideas. There's so many things that you can build and test. The only hard thing that you have is when something is, as you say, quite difficult to kind of like pull across to an algorithm, that's the sort of strategies that'll take time. And it won't be, you'll build it in a day. It could take a week, it could take a month, it could take longer than that, depending on how sophisticated the strategy is. But if someone was wanting to start this, there's a lot of basic strategies that you can actually build out there that surprisingly on certain markets are actually profitable, even how simplistic they are. It's just, to build a better sort of like robust, systematic portfolio, you do need to start adding a few more other things that will definitely help it.
Yeah, it's that almost like that kind of, the deeper you go down the rabbit hole scenario, isn't it? Because there is so much.
Yeah.
And that's what I've always kind of thought, because back when I was on the floors, etc., I had these secretive rooms, guys have black boxes, grey boxes, and this is going back way back because I'm doing this a long time. But, there's kind of this idea with enough information, you can analyze everything and then cherry pick the best. I mean, do you think that's happening in the markets right now? I mean, obviously, someone with, like your Elon Musk or whatever, I'm not a tech guy, but someone that's got unlimited access, your Googles, Microsoft, Bill Gates, if they could run every permutation of every scenario, of every strategy, do you think that's in play in the markets now? Or, how do you view how the markets are working?
I mean, it could be. I mean, Mark is a mystery to me. I mean, it sounds quite bad. I don't really care what's going on as long as I'm pulling data, and building these systems that are working on a low risk model. I don't really mind what sort of players are out there exploiting whatever it is that they do, because you've got some big players out there that will be exploiting God knows how many systems on such a low risk scale, but collectively together is what is making them a lot of money.
Yeah, I know it's always just interesting, isn't it? I guess from my perspective, when you do, read and have experienced, kind of how, the bigger hedge funds work and et cetera, et cetera. As you say, it's good to have that divide, isn't it? It's kind of like I can control what I can control, the data
Yeah.
I have, the systems I create. And that makes a lot of sense. So, I mean, have you kind of trained yourself to kind of take out the emotion? Have you always been like that?
I've to begin with, I was very emotional when it come to the markets. I've had some crazy good days, some crazy bad days, and that was when I was more manual trading, and yeah, my emotions were flying everywhere. But
Mm.
when you do move, I wanted to try to take that away and sort of like sort of disconnect, because when I was manual trading, when you're placing trades, you're constantly seeing the P&L, your balance, your equity move up and down. Whereas, when I'm algo trading, I mean, all I'm checking is to make sure the execution is all right. I'm not really too bothered what's going on. I just make sure that, the data matches the data each week to make sure it's good. So, having the algos really does take that away. Every single trade that's executed, you're not looking at the P&L. So for me, that was the biggest thing that kind of I managed to help, change my mindset in terms of that. Also, the doing the natural things, reading some good psychology books, listen to some podcasts and stuff like that. Just the general stuff, that helps everyone, I believe. But no, before, no, it was a roller coaster. I can definitely relate to that.
Yeah, I mean, no, again, it's always interesting because this is what we're trying to give the viewers, that you can make that positive mental shift, and you can take a lot of the motion out of trading by automating it. And yeah, I mean, if you say it's as simple, well, simple as you say it is, but we've said the tools are out there. I guess for dinosaurs like me, it's the world's moving on. There is so much, kind of access to tools and information that you just have to know, I guess, where to look. And and then if there's a platform like Darwinex which allows you to then scale up, it seems like the kind of perfect scenario.
It is for especially the retail sort of side that are, like for instance, like UK, because of the heavy regulation and stuff like that. So to have a platform like that accessible to someone that's, say, not got the qualifications or not got the sort of like capital to start a hedge fund or the backing, it's really good to get yourself out there, essentially.
Yeah, I mean, from a kind of risk perspective, obviously, I know you've got all your parameters set, and it's very low risk. What happens when invariably big moves do happen? Stops can get missed. There are kind of market conditions, and I've traded a number of them where things just don't happen in the way you think. Are you ever kind of concerned that an algorithm is never going to be, because they never are. It's never going to be perfect. Have you got any kind of like fail safes in place, or I'm trying to think of like the kind of like from the safety perspective, does Darwin provide that, or have you got kind of like an overall, if X% move in the market, everything gets cancelled and when the algorithm stops? I'm always into that perspective because my little tiny foray into that, some of my trades went wild, and you had to manually step in and stop them. So I'm just saying from my personal
Yeah. I mean, Darwinex have their sort of like safety. It's called a VAR system that helps, and I think that's how they've got the regulation around the FCA and things like that. But when I build my systems, all of them have like a fail safe. All of them have like loads of different things going on, because at the end of the day, managing risk is the most important thing before actually trading. So, they're the most important things to build first, then build out from that. So, simple things like spread filters, slippage filters. These are always
Yep.
good. Also testing your stop losses in different. So one of the things I like to do is put basically have it like really bad slippage and really bad like spread conditions. How does the strategy perform in these sort of situations? Because variable spread, especially during news, is where it's going to kill certain strategies. If you're using a tiny stop loss around certain news events, you're getting slipped in and out, and you're going to lose double, maybe triple what you're actually risking it originally.
Definitely.
In a really crazy market conditions, it's going to hurt quite a lot of people. But that's again why I use like the low risk approach. Let's say it was a really bad day. I've got slipped like twice my risk. My loss is not going to be that big. It might be up to 1%, which is not, you survive you survive for another day essentially. Whereas, if you're doing higher risk with like say smaller stops, then that can really, wipe you out in the space of a matter of days. So that's one of the ways that I control risk, but also having like X amount, as you say, per day that could be lost in certain strategies. If certain strategies hit new max drawdowns or new equity like lows, that's when I would then potentially, what I would do is then half the risk to see, okay, is this just a new equity low or is this going to keep going further? And then I do have a cutoff point for strategies. If they do actually go beyond that, I'll then put it on a demo account to see, okay, is this going to recover or is this strategy dead? So there's lots of processes that I have in for risk management to stop a lot of these sort of situations from getting out of hand.
Yeah, I mean, that's also interesting as well. I mean, how have you found shifting from demo accounts that have, technically, get filled at every price, stops are kind of almost guaranteed executions like that. I mean, how have you found moving from demo results to live results? It's never the same.
Yeah, so when I first started out, I started out with a demo account. Results were good. I shifted it to live. Results were bad. So from that point, I always just put it on live accounts, small balances, just to sort of make sure it's tested in that live environment. As I said, the only way I'd put on, when I say demo account, I use Darwinex 0 to sort of like build strategies in the background, which is technically a demo account, but in live conditions.
Simulated live.
Yeah. So, sorry, when I say put in a demo account, it is a demo account, but on a live conditions as such as they stay. So it just means that you're actually getting somewhat as close to real market conditions as possible from what I can say so far. So these are the sort of things that I do in the background.
Yeah, got you. Yeah, I mean, it's a lot of things I talk about, other things I've done over the years. There are just different conditions for professional traders and retail. It's a different animal, with direct market access, being able to trade on the actual exchanges, you have different conditions. You put bigger size through, bigger clips. So again, it's from the retail perspective, is knowing that you physically can't trade like a pro. You can, to a certain extent, still trade in the markets, but then your scalability, your access to prices, especially if you're talking about, kind of getting individual prices for fills and getting out very quickly, it just isn't the same. So I think that's the kind of education part that, retail traders, and rightly said, as retail traders have to learn a slightly different way of playing the game, because it is a different set of rules.
Yeah, it's one of the reasons that I do stick to a lot of the more liquid sort of like assets as well, because less things can go wrong with the more liquid assets. There's just learning about things like that. Simple things like that can help you as a retail trader as such.
Yeah, exactly right. I mean, I just stick to 8 products. I don't jump to the next big thing. I'm not searching to trade the South African rand over data. It just isn't. It isn't there, as you say. Again, I trade a lot of dollar, yen, gold. Things that are in portfolios, have been for years. Very, very liquid. And it's that volatility is a dual-edged sword, isn't it? And it works for you, it's good. But if you're trading something, very liquid, it's either very, very good or very, very bad because you simply can't get out.
Yeah, exactly.
I mean, is there anything kind of, going forward that, has piqued your interest? I mean, I'm just trying to get an idea of, obviously picking liquid markets. It makes perfect sense. But I mean, are you looking to kind of, we briefly touched on crypto. Would you do like a crypto focused, type fund where you just focused on that? Or would you have to always balance the risk out with different asset classes? I'm just trying to think What's your kind of future projections?
Yeah, I mean, for my main portfolios, I just want to keep it, sticking to what's liquid. And let's say I build sub portfolios, then that would be sort of like dabbling with some of the other things. Like if the data is good, let's see how it performs over the next couple of years. So it could be like weird, more exotic pairs. But I mean, to be honest, that's like a last case scenario from out of ideas. Regarding crypto, I would just keep that separate because I don't want to mix sort of like one and the other. So I would just keep that separate. I don't know what will happen. My data says it's really good, but who knows how good the fills are, how the spreads are. It's open Saturday and Sunday. How are those market conditions? Trading live, how good it depends. How much money can actually be pushed into it, I don't know yet. So these are the things that I'll discover hopefully down the line. But my main focus is, doing what already works, essentially, focusing on what already works. So I don't see the need to sort of like shift my focus somewhere else. But it's always good to have something going on the side in free time. So that's what crypto would be. Yeah.
I don't want to kind of like try and steal your IP. I'm just still trying to, give something across to the guys because I know a lot of traders want to try this, but it's like everything, isn't it? I don't want to trade my system and it'll fail. They want to do an algo and it'll fail. There's no guarantees. This isn't a sales pitch. It's just talking, about what you've done and what you find is working and interesting. I'm just trying to think if there's anything else from your perspective you want to kind of.
One of the things that is very easy to sort of go wrong within algo trading is obviously curve fitting. So many scams will be built upon curve fitting in algo trading, and it's very easy to do, surprisingly. So, the best thing you can do when getting into algorithmic trading is sort of like build what I call it like, it's, you have your own sandbox, but make sure you stick within these sort of like rules. So like an example for like one of the rules that I might have in certain breakout strategies would be on a risk one to make one, the win rate has to be over 50%. So anything below that, I chuck in the bin. Then if I'm doing optimization of say stop losses, what I want to see is like a really good sort of like working range. So let's say you build a system using an ATR stop loss of like the 1 hour. It works perfectly on the 1 hour, but the other time frames it doesn't work. So I wouldn't see that as a robust system. Someone that maybe just started might think that's the golden ticket because the results are good. All it takes is a small amount of changes in the market, and these systems could, just absolutely fail. At the same time, it could work. But for me, I'm not interested in just picking some of these things. I want to see, so if I build like a system, it's got to work between, say, the 15-minute ATR to the like daily ATR. If it works in that big range, then I know I've found something that's robust. And then you can build around that and really not over optimize, but really optimize like average moves. So depending on the asset class. So let's say we're trading gold. We know the average move in a day can be massive compared to something like dollar yen. So again, building a lot of these things around robust areas is definitely, if someone's starting out, is what they should be focusing on to begin with, to build sort of like robust system to make sure that they're working for as long as possible. Obviously, every year you do reviews and stuff like that, but that's probably one of the biggest advices I can give if someone starts out with algo trading that I have found useful. Not saying it's the best approach, but so far it's worked for me.
Yeah, no, that's a good point. I mean, again, it's almost like when you start to trade in any sense, you want to read every book, watch every podcast, and I'd call it's almost like snow blindness, isn't it? You have so many kind of ideas that they start to contradict themselves, and then that must be a really difficult thing for you because, as you said, the phrase that over optimization, you just have to keep pulling yourself back, and it's just like, well, one more tweak or one more thing can make it better. I mean, does the technology help that? Or is it always that kind of unknown, that kind of special magic spot where you've got enough data, you just have to trust in the system rather than, it could always be better type scenario?
Yeah, I think that could be a mixed opinion, to be honest. Like, for me, just because I've been so focused on breakouts, and then when you hear like a podcast about, say, someone that's a mean reversion trader and things like that, their beliefs will be completely different to yours. And sometimes trying to shift to try and build around what their beliefs is quite hard. That's the thing that I find probably the hardest. Like, because I've been more breakout trading, it's very hard for me to shift and build mean reversion strategies because I'm thinking as a breakout trader. So that's probably the hardest thing that I actually struggle with the most in like building different sort of systems, because you've really got to think from a different perspective.
Well, I mean, it's no different than being a trader, though, is it? Because traders have personalities, markets have personalities. It's very difficult to shift your personality, and that's something I've worked with traders over the years. It's like some people will just want to scalp, some people want to be breakout traders, some people will want the day trade returns, but don't want to do what's involved with having day trade returns. You know, deal with that emotional side. So I completely understand this idea of making it algorithmic and having set rules and taking the emotion out, because I think there are certain types of trading where, especially when I do short-term scalps, especially the size I do, you can't remove the emotion completely. It just isn't possible. You have to manage the emotions and harness the emotions. Whereas what you're saying, for much more kind of, your balanced portfolio kind of strategy and for longer terms, that doesn't really come into it. So I'm just going to note of, so the moderator saying we should talk about 2016. What's our outlooks? But it doesn't really matter for you, does it? I mean, that's the whole point of why you're doing these kind of systems is you've got the data over a long period of time. So 2016, 2026, sorry, would just be another year, won't it?
Yeah, exactly. I mean, you can dig more into the fundamentals in each system into why they're working as well. Like that's always worthwhile doing to understand the actual underlying like assets. So, if you're trading dollar yen against, dollar against the yen, you got to know about the monetary policies and like, the interest rates and stuff like that. And, when you understand like the basic like fundamentals of how they work, then it's easier to sort of like build a model. So you'll know if certain interest rates change, you might see a completely difference in volatility as well. So you got to have that in the back of your mind as well, like especially for like say trading forex. So many things can change in forex, and that's why it's so difficult to trade. But there's certain things that have worked for God knows how long that fingers crossed they keep working. So it's good to have an understanding of fundamentals when building certain systems as well.
Yeah. So you wouldn't kind of, obviously they're very, I'm not technical, but there's very easy like news scanners where you can kind of, scan for, keywords, etc. Would you turn the algo off for really big events, or would you just let it play? I mean,
So I've built like loads of different filters to test different events. So like NFP is a very easy one to build. How does the system trade? How does your system do around NFP? Get that data and you either trade it or you don't. Some systems will do good, some systems won't. I find that most of my systems, sort of depending on what pair it is or what I'm trading, will underperform during NFP because of how volatile it is. So some of my systems will not trade during, non-farmers payroll.
well, I mean, I guess that's the thing, isn't it? When you're kind of trading to your kind of small level of risk, that again, you're gonna have the good and the bad. It's just the overall return over a period of time, isn't it? Where I guess other traders were much more specific that their opportunity is the news, but then they might not trade for the next non-farm payroll. So yeah, it's interesting. Yeah, that's good. So I mean, obviously, what your main goal is to get this 100 million in funding. So that's interesting. Big round numbers. Yeah, I mean, it's all interesting, isn't it? I love getting kind of different kind of traders on that have different, kind of ways they've started, different backgrounds, like your engineering, and then, putting your focus on this algorithmic stuff. And I think, a lot of traders, especially with the volatility, will probably look into this kind of stuff because, I think you're right. A lot of people physically can't take the emotion out of trading themselves, no matter who they listen to or what they do. So, going into that more kind of algorithmic space and having, defined rules and machine say yes or no could certainly help people.
I think it definitely would, because it definitely helped me. And I generally don't think I could, from my personality and what I've experienced, I don't think I could do manual trading from an emotional point of view. Whereas definitely moving the move to algorithmic trading, definitely. And the way that I traded, obviously, back then I trade 1% per trade. Now it's like 0.05 or sometimes more, sometimes higher. Definitely doing these things that you see less. For me, it was seeing less big swings. Like, you understand where your sort of like emotional thing is as well. But definitely algo trading will definitely help and sort of like take you to that next level and, understanding, because you've got more time to sort of like work on emotions when you're doing lower risk as well. Also, drawdowns are a lot slower, which definitely helps as well because you can make more informed decisions.
So did it actually help with sleep then? Because I'm genuinely interested. Did you get to your goal of being able to sleep, or do you still find yourself waking up going, "How's the algo doing?"
To begin with, when I first did algo trading, it was hard to get out of that shift, but I can safely say after probably a couple of months of algo trading, I can sleep well now.
Well, that's good, mate. That's good. That's good to know. That's been very interesting. Yeah, I like the approach, and I like how you've kind of just gone off and done it yourself. And that's what's really kind of interesting about this AI and information age. There's going to be winners and losers. There's people that, if they don't kind of keep up and adapt with the information that's available, then, I don't know, your opportunities are going to be fairly limited, I think. But that's a conversation for another day on the pub, mate. We could have a beer in the snow. You must have a nice local pub still where you are.
Is it close by?
Oh yeah, okay. I missed that. I'm in New Zealand, so yeah, that kind of the idea of the local that just doesn't exist here anymore.
No. I mean, I would say I'm about 3-minute walk.
Ah, perfect, mate. Perfect. So, I mean, what's the best way for people to kind of follow you, interact with you, contact you? You're a social media guy, or how can people speak to you about this?
So I do have socials, but because I'm always busy like building, I'm not too active. So probably the best way for people to contact me is probably through LinkedIn. If they go on my YouTube channel, they'll find a link for Discord. People can communicate with me through Discord, but I only log in a couple of times a week. So LinkedIn's probably the best thing, or whatever way you decide. I'll reply within a week or something like that.
Well, obviously they can follow the fun because all the Darwin stuff is public.
Yeah, of course, of course. You can follow me on Darwinex, IME, and see how the performance is getting on as well.
Yep, perfect. Well, listen, Blayn, it's been a pleasure. Yeah, really interesting stuff, and I think people will get a lot out of that. I think it's time. Yeah, even I'm thinking, should I do some algos? Yeah, I'll do some research tonight. No, it's been good. Really enjoyed it. So, and if you guys listening have liked this conversation, always remember to like and make any comments you want. The feedback's always welcome, and it's been a great interview. And right, I'll speak to you all later. And thanks to Blayn. And until next time.
Thanks for having me on, Steve.
Anytime, mate.